All right, good morning, trade pros. Welcome to Morning Market Update for Monday, May 20th of 2019. The weekend is over, but the fun is just beginning. All right, we got a great update for you today. We're kicking off the week with a Canadian bank holiday, so the halls here are pretty empty. There's literally nobody in the office except me at the moment. Mark's arriving, but it is a Canadian holiday, so by law, you know, it should be out there. It's a federal holiday. It's called Victoria Day. Basically, it's the May 2-4 weekend, as we call it in Canada. Canadian banks are closed. U.S. markets are open, and we're ready to rock here. All right, so morning market fun fact. Of more than 90% of companies in the S&P 500 that have reported their first quarter earnings so far, 76 have delivered earnings per share above the mean or average estimate. All right, and have exceeded expectations by about 5.4%, which is above the 5-year average of 4.8%. So we've got a pretty good earnings season according to analyst estimates. But if you look at it year over year, it's not as good. It's actually below what the average has been and the prior year numbers. So all in all, a little bit of mixed stats there, but it is still a fun fact to know that analysts are still setting low metrics and companies are jumping over those hurdles, giving it the illusion of strength in the earnings reports. Very interesting stuff going on here in the markets. This week, we're starting out on a very bearish note. On a negative note, markets are lower this morning as a lot of U.S. companies are cutting off access to goods and services to Huawei in China. All right, Huawei is a massive company. It makes phones, laptops, and a lot of technology, and they're one of the key developers, and they're leading the race to 5G. They're the closest to having the 5G network rolled out, all right? In fact, they already have it operational. However, U.S. companies are cutting off access. Here's a few companies that have reacted to this. According to the Trump administration executive order to ban United States companies from supplying to Huawei, here's the news. Qualcomm has taken action and stopped supplying Huawei. They're down 3.1% pre-market. Intel has stopped supplying Huawei. They're down 1.8%, and Micron's down 3.7%. All right, so the companies that are stopping the supply, you have to understand that's a loss of revenue for them. A loss of revenue means less sales. Less sales means less income. Less income means less to go around to the shareholder and lower stock price, and that's natural. All right, so one thing you need to know is, despite these three companies cutting off access, the key thing here is that the trade war is now escalating. A couple weeks ago, when we had meetings, 2 weeks ago, when there were meetings ongoing, it was de-escalating. Everything was good. Everyone was happy. Markets were rallying. Now, not only did China say there's no future plans to meet for further trade negotiation, now there's more escalation and tension. So we've reversed pretty much all the excitement going into those meetings of 2 weeks ago, and we're back onto a full-out trade war scenario. All right. China responded by saying they won't sell to any companies who ban their technology or ban any imports of chips to their company. So they're basically taking retaliatory measures. It's Monday against the U.S., and this is an escalation from both sides. All right. Here's the interesting part. Google is also jumping on this and giving access. Google supplied Huawei with the Android operating system, the latest one. All right, and that's how Huawei was able to sell their technology without having to develop their own operating system, which is super costly. All right, now Google's cut them off from the latest software. They said going forward, they only get the open source version of Android, which is less stable and it requires people to modify it and keep it up to date. All right, and so they've just lost their operating system for their phones. Companies that do well, ironically, in these escalations when other companies like Huawei are losing market share, companies that do really good are Ericsson and Nokia. Nokia stock symbols NOK, Ericsson's ERIC or ERIC. Nokia's up 4.1% pre-market and Ericsson's up 1.6% higher. All right. That's what's kind of worrying the markets this morning. That's why we're down. It's not Huawei in specific. It's not anything else other than this. The trade war is escalating once again, and we can only expect further aggression from both sides, and that's what the market's really worried about. What's news already is priced in, but what it's worried about is another squawk today, tomorrow, throughout the week at 1 p.m. saying China is going to do this or U.S. is going to add more tariffs or more products. The next move is now expected, and that's how the market's getting nervous. It's getting ready to price that in. In our Sunday analysis report, we said sell rallies, look to the downside. I did think Monday through Tuesday we're going to see a little bit of a rally higher to squeeze out some shorts that are in the book, we could just continue lower right off this morning session. So be cautious out there. All right, switching gears to oil. OPEC agreed to keep, or is looking to keep, their output cuts at the current levels, which is a surprise. All right, because there was news that the OPEC agreement could fall apart as Russia wants to supply more in the market. And obviously, this output cut agreement, it's been long enough that I'll give you a very quick refresher. It's like being a business that sells, let's say, I don't know, what are you selling? Plastic cups. And you go to every other business around you that's selling plastic cups, and you say, we're only going to sell 10 cups each a day. So let's limit our production and let's limit our sales. But your production facility's got the capacity to do 100 cups a day. So you're running under an efficiency marker of your business, and you're giving up sales collectively as an industry in order to be able to sell those cups for more per unit. And that's what OPEC's done. However, here's the problem. Everyone wants to make as much money as possible, and these countries need more sales, all right, especially Saudi Arabia, to balance their budget. Oil is a significant source of revenue and their primary source of revenue to balance their budget, so they need to sell those barrels. They have a low production cost per barrel, and they need to sell it just to generate cash, even if it's at a slight loss to a slight profit, right? That's what's happening. That's why we thought that this whole agreement was going to fall apart, and Russia didn't want to take place. Russia wanted to sell more oil. However, Saudi energy minister said that there are, I'll read it to you verbatim. They said that they want to keep production cuts where they're at the moment so it could drive prices gently higher. And he said, although these markets remain fragile, said the second half, our preference is to maintain production management to keep inventories on their way declining gradually, softly, but certainly declining towards normal levels. All right. He told a news conference after their OPEC meeting this weekend, and he did cite that there's concerns about Iranian supply, giving it a bit of a price boost. At the same time, remember last week's IEA report said there's less demand. So the fact that OPEC is out here and agreeing to limit or keep their production cut quotas at the moment is bullish for the price of oil, and it shot up a lot. It went up to 63.96 to the high end, the move up almost $1. All right, on this news, and then we faded that whole move. Now it's below that level, way below it. We've dropped the dollar because demand's lower. IEA said demand's lower, and that offsets the fact that they're keeping the production cut. So oil's in for a pretty volatile start to the week, and I can't wait to trade it with Steven and the team here in the trading room. Let's take a gander across the stock market complex globally. In Asia, Japan's up 0.2%, Hong Kong's down 0.6%, China's down 0.4%, India's up 3.8%. In Europe at midday, London's down 0.8%, Paris is down 1.3%, and Frankfurt's down 1.3% also. So European equities are getting hit quite hard. In the United States, Dow, S&P both down 0.4%, Nasdaq's down the most at -1%. All right, crude oil at the moment is trading. The pit session open at 62.80 is what I have it marked at, give or take a few cents. I'd have to look at my other chart to know exactly. And we opened below Friday's close after rallying as much as 63.96. We've given up now over $1 of the gains from the Saudi oil minister's statement. S&P's trading much lower, way below the previous day close. We're about 40 handles below there. 30, 34, 35 handles. And I think it's a sell rally moment. On the open today, I'm seeing a little bit of a rally higher, and then that's going to get faded quickly. I wouldn't be surprised if we crack 2,800 in today's session. All right, it's a little bearish looking to start. Gold is flat. Bitcoin's down 1.1%. In news this morning, we have Fed's Bostic who spoke, who's a dove and a non-voter. We'll still go over what he said in a moment with the elite, or not the elite, but rather the trade room. Fed's Harker is speaking at 9:30. A lot of federals speak. Fed's Williams is speaking at 1 p.m. along with the Fed's Clarita. And last but not least, at 7 p.m. tonight, Jerome Powell speaking. I know I say this kind of as a joke sometimes. I'll definitely be watching it, but tonight I might, because it's a very important speech, and we're at a very important point of the stock market and the economy. They're diverging at the moment. The market is a lot higher than the economy is, and so the Federal Reserve becomes of paramount importance. His speech is at 7 p.m. If you don't watch it, at least read the summary afterwards at some point. All right, on a reputable site like Wall Street Journal. That's what we got for you guys. Happy trading out there. We're going to look to early morning. We're going to see a little bit of rebound, I believe. Then we're going to look to start selling rallies for the day. And whatever happens, we're going to take advantage of it. At the end of the day, your job as a trader is not to make a prediction and be right. It's to start with an idea and allow your idea to change and mold as you see different things happening in the market. That's what we do as trade pros. So I want to wish you guys a great Monday. Have enjoyed the rest of your days. If you're Canadian and you're watching this, enjoy your holiday, your extended weekend. I'm going to trade in the morning and probably take off in the afternoon and enjoy it myself. I mean, it's kind of cloudy. Yesterday was a beautiful day, but it's cloudy here today. So we'll see. All right, you guys take care. Have yourself a great day. Manage your risk, trade like trade pros. I'm going to turn around. We'll open up the trading room, talk about some levels and trade ideas. All right, trade pros, let's do this. I'm excited for today. I think we're going to have a lot of opportunity. Markets are going to get volatile. And I see some downside coming in here. And I'll give you some support levels. Let me start with the S&P 500. And then I'll flip it over to Steven to talk about oil and where the next opportunities are. The oil market's already open, the pit session. And we'll have some great opportunities. Let me get started with S&P 500, and then I'll flip it over to Boxy.